Welcome to FundooMoney web series on tax filing. We are discussing various aspects people need to keep in mind while filing for taxes. Now, the better half is really the better half, and but the taxman doesn't really spare the better half also. So what does a person do while filing taxes if the better half has made income? We are referring when your spouse is not working really and is also making some money from investments or some other sources, or you have gifted some money and that has made some money. How does one negotiate these aspects to help us understand and appreciate and give us some actionable information? We have with us eminent tax expert Swami Saran Sharma. Swami, welcome to this segment. Swami, if you have a non-working spouse, a taxman doesn't spare that our loved one also. Now, how does one deal with that income that person is making? Obviously, taxman it won't escape the taxman's net.
Normally, then obviously, if the spouse is not working, she will not have any income. But in case she has an income, in that case, it could be either out of accumulated savings. She could have been working in the past, may have accumulated some savings, and there is some earning based on that income, that money. Then it is to be taxed in her own right. She has to be taxed. So she'll have to pay the taxes applicable to her. But in case, which is what normally happens, husbands, they do transfer some money to the spouse's account.
Yeah.
And that amount keeps on earning money in her name. So in that case, tax treatment is very clear. All that income is to be added to the income of the husband. That has to be clubbed as per the provisions of Section 64 of Income Tax Act.
So even if you have a non-working spouse and the spouse is ending up making some money, it actually gets added. So again, that truth about inevitability of taxes comes to the fore. Swami, one quick word. What happens if the non-working spouse gets some kind of gift from certain people, relatives, etc.? What happens to them?
If there is a gift from other than husband, so any other person, there are 8 relatives which are named in the act. They could be their brothers, sisters, father, mother, their spouses, and uncle, aunts, and all. Then that becomes the capital of that person. So once that capital is invested and to earn some money, then it essentially remains spouse's income.
Okay.
It is taxed in her own right.
Okay, this will be really great information to have harmony at home and harmony with the tax man. There's lots more information, in fact, waiting for you at our leading social media platforms and, of course, at our website www.fundoomoney.com.